Have you ever felt like the Forex market is this relentless 24-hour game that you just can't seem to win? It's a global marathon, and it never, ever stops. But here's the thing. What if I told you the secret isn't trading harder, it's trading smarter? Well, that's exactly what we're going to break down.
At first glance, a market that's always open seems like a golden opportunity, right? Endless chances to make a trade. But as a lot of us have probably found out the hard way, it can also be a one-way ticket to burnout and a seriously depleted account. So how do you find those profits without, completely wearing yourself out? You see, the stock market is kind of like a regular 9 to 5. It's got a clear open and a clear close. But Forex? Oh no. Forex is like a global relay race, with the baton being passed from one major financial center to the next, around the clock, 5 days a week.
And let's be honest, we've probably all been there, right? Glued to the screen at 2 in the morning, stressing out about some data release from halfway across the world. That approach, it's just a recipe for disaster. There is a much, much more strategic way to play this game.
Okay, so to win this game, you've got to know who's on the field and, crucially, when they're playing. So let's pull back the curtain and deconstruct this whole 24-hour cycle. Let's meet the global players.
So every week, the whole thing kicks off in Sydney. Now, it's the smallest of the big sessions, for sure, but it's super important because this is where the market kind of finds its groove after the weekend. Think of it as the opening act, before the headliners take the stage.
Next up, the baton gets passed to Tokyo. This is a huge Asian hub that brings a ton of trading volume with it. And this is when pairs like the US dollar/Japanese yen get really, really interesting. Why? Simple. The Bank of Japan is a major force, and its influence is at its absolute peak during these hours. Now, just as the Asian session starts to wind down, London wakes up and takes center stage. And folks, this is the big one. It is the absolute epicenter of the Forex world. Trends are often born here, and trading volume just explodes. If you're going to watch one market, this is it.
And if you need proof, just look at this number. London accounts for a staggering 38% of the entire world's Forex trading volume. That's insane. It is the undisputed heavyweight champion, and if you ignore what's happening in London, you're missing a huge piece of the puzzle.
And finally, the last major player joins the race, New York. Now, what makes this session so incredibly influential? Well, it's all about the US dollar. It is the world's reserve currency, and it's on one side of a massive 88% of all global Forex trades. So yeah, what happens on Wall Street sends ripples everywhere, instantly. Okay, so you've met the 4 big players. But here's the real secret, the key to the whole thing. The magic doesn't happen when just one of them is on the field. It happens when their schedules overlap.
This timeline lays it all out for you visually. You can see the handoffs, right? From Sydney to Tokyo, then to London, and on to New York. But look closer. See those periods where they overlap? That's it. That's the sweet spot. That's where all the action is.
So what is a market overlap? Well, think of it like a party where 2 different groups of your friends show up at the same time. The energy level shoots up, everything gets a bit louder, and things just get way more interesting. In the Forex world, that means more money changing hands, higher liquidity, and bigger price swings. Here's another way to think about it. When only one market is open, it's like driving down a quiet side street. The traffic is light, the pace is kind of slow, not much excitement. But when 2 markets overlap, you are suddenly merging onto a 6-lane highway during rush hour. The speed picks up, the volume is way heavier, and you have to be on high alert for opportunities everywhere. And now let's talk about the main event. We're talking about that 4-hour window, from 8 a.m. to noon Eastern Time, when London and New York are both open for business. This is when the 2 biggest financial centers on the planet go head-to-head, and it creates this incredible surge in trading volume and volatility. Just let this number sink in for a second. A massive 58% of all Forex trades happen during this one single 4-hour period. That is more than half of the entire day's volume. So if you want to maximize your chances of catching a move, this is your prime time. But hold on, it's not just about the time on the clock. There's another huge piece to this puzzle, a wild card that can come in and change the entire game in an instant, and that is the economic news calendar. This quote really says it all. You could be in the sleepiest part of the trading day, and then bam,
A major economic announcement hits the wires, and it can ignite volatility in seconds, completely shredding the normal daily patterns. This is where you can find some of your biggest opportunities, but also your biggest risks.
Look, you don't need to be an economist here, but you absolutely have to be aware of the big news events that can rock the market. Things like interest rate decisions, inflation data, GDP reports. Before you even think about trading for the day, you've got to check the calendar for these key releases. All right, so now we know about the players. We know about the golden hours, and we know about the wildcards. It's time to put it all together into a simple, effective trading strategy that you can literally start using today.
It really just comes down to 3 simple steps. First, pinpoint those overlaps. You want to focus your energy and attention on that high-volume US London session. Second, you've got to watch that news calendar. Know what major economic releases are coming up for the currencies you're trading. And third, trade with a plan. Combine the best times with the key events to really maximize your potential.
You know, the goal of all of this is to create a trading schedule that works for you, not against you. Imagine actually being able to trade with confidence, knowing you're in the market at the absolute best times. And then you can just step away and enjoy your life without that constant fear of missing out. That's the real power here.
So there you have it. You now have the blueprint for timing your trades like a pro. You know exactly when to be in the market and, just as importantly, when to stay on the sidelines. But that leaves one big question, doesn't it? Now that you know when to trade, do you have a strategy that can actually turn that perfect timing into consistent profits?